Hello everyone, and thank you for joining us for today's presentation as part of the Industry Insight webinar series. The topic this time is 5 accounting resolutions for your law firm in 2019. Speaking today will be Erica Bristlier of Cosmolex. Erica Bristlier is the Director of Strategic Communications at Cosmolex, developers of an all-in-one cloud-based legal practice management, billing, and trust accounting system specifically designed for solo and small law firms. Erica's degree is in business administration, and she has over 6 years of experience in the legal software industry, catering to the specialized technology needs of small to mid-sized law firms. Erica has given numerous presentations across the country on legal technologies such as law practice technology management, cloud computing, and legal billing and trust accounting compliance. The presentation today will be followed by a Q&A. Please enter your questions into the question box in the webinar panel on the right side of your screen. All questions will be addressed at the end of the presentation. We're recording this webinar and we will be sending a video and a follow-up email in a few days. We'll also post the video on our blog at www.lawtechnologytoday.org. Thank you all for joining us. We'll now begin the webinar.
Great, thank you so much and welcome everyone. Today we will be talking specifically about legal accounting. This is actually a great time of year to talk about accounting specifically because you're closing out the prior year and you may want to do a bit of reflection on how that past year went and the different workflows that you had or how streamlined or not streamlined they may have been, but also how to start the new year off the best way possible. And that's why we will be focusing on 5 resolutions to improve your accounting compliance. And lastly is how can technology help? So very often the tools that you use or the processes or workflows that you have can either help or hurt your law firm as a whole. And definitely when you're talking about accounting and financials, you want to make sure while you want to be efficient, you want to ensure that it's still accurate and the work that you're doing is correct from a compliance perspective. So we'll be talking a little bit about that as well. So we'll start with the basis, the foundation about legal accounting. And I do want to point out that it's not about who is doing the work. You may have a bookkeeper who does these activities. You may have somebody, staff, even in-house, or it may be yourself. The point is, regardless, the firm is responsible for ensuring that everything's done correctly, that compliance regulations are met, but also the people that are making those business decisions. You know, usually the managing partners are the ones that decide what direction is the firm going to take. And accounting plays a very vital role with that. So it's important to know what the components are, as well as what to do with that information. So the first component of legal accounting is the business accounting. That is really what every business, all different types of businesses need to think about. That's tracking your income and also your costs and being able to do your end of year reporting and filing your taxes. Fairly general across the board. It's more so the next 2 points that make accounting more specific for law firms. That second point is matter costs and also income. So you have costs that you're paying out of pocket that need to be reimbursed by your client. Not just the reimbursement part, but from the accounting side of things, what general ledger accounts do those get posted to? How are they reimbursed? How is that accounted for? Is it accounted for differently than just fee income? It absolutely is. So how is that entered and recorded properly? And then the income accounting is more about when you do earn the income, when you do have invoices that are paid, how does that get allocated on your general ledger? It's different from other businesses. And then the third piece is dealing with fee advances and retainers. That is typically where your trust accounting is. You're managing funds for your client that are not yet yours. And there are different compliance regulations that come into play. And it's not complicated necessarily, and we'll talk a bit about trust accounting specifically. It's not difficult, but there are rules. So you just need to be educated on what those rules are and ensure that they're being followed. So that way your firm remains in good standing. And if you were to get audited, you really have no worries at that point. So now that we understand the basis, our 5 resolutions do center around all 3 of these different components. So we'll start with our first one, which is ensure proper handling of client funds. Now, there is a reason, as I said, why trust compliance is so strict. It is not your money yet, plain and simple. When it is your client's funds, whether it's in the trust or the business account, depending on your state, depending on the requirements, you need to manage those with the utmost diligence and care to make sure that they're being treated properly. It comes with there's federal, like overall guidelines, but also state requirements. So you want to make sure that you are knowledgeable, not just your bookkeeper, but you, as to what should and should not be done, any particular deadlines, any reports that are needed, if you were to get audited. You want to act like you're going to be audited tomorrow. That's really how your law firm should operate, because you don't want to be in that situation where an audit were to come up, they call and say, I'll be there in 2 weeks, and your business is practically shut down for 2 weeks trying to recreate these records or figure out how to get this information from tools and data that just does not exist. Now, when we talk about trust funds, you want to keep in mind the different activities that can take place. Now, it may differ based on the type of law that you practice and the way you handle client funds as to which of these apply to you, but you do want to think of third-party disbursements. That's cutting checks out of the trust account, maybe for real estate or personal injury. Third parties have to get paid, and that money comes directly out of trust. So that's one way. The other, of course, is when you earn those funds from trust from your retainers. And then the third way is if you have third-party liens or bills. So eventually those do get paid out of trust. So in the example of that I provided before, personal injury, they do get paid out of trust, but not yet, not until the settlement happens. So you need to make sure you're tracking all that information properly. And all of that falls under trust compliance because you're having to manage those funds that are not yet yours. So overall, what belongs in trust? Now, this should be fairly straightforward, but it's always good to review and remind everybody that in general, this is the guidelines you should follow. Now, I always say, when in doubt, put it in trust. If you're not sure, if you're uneasy about a certain situation, put it in the trust account. Better safe than sorry. So the types of funds that you see in trust are settlement funds, which, like I mentioned, can be from maybe a workers' comp or personal injury case or something similar to that, where it may need to get dispersed out to various parties. Unearned income, those are usually retainers that you may accept but don't earn yet. They may not be earned for some time or maybe short term, depends on the case, but not yet earned. And third-party funds. Again, anything that you're maintaining as a fiduciary to a third party that you're agreeing to keep in your trust account, that could be there as well. The items that do not belong in the trust account, again, these should be self-explanatory, but it's always a good reminder. Anything related to personal funds, none of your own money should be in the trust account. Now, there are some states, and I want to stress that, some states, not all, that do allow you to have a little buffer, usually a couple $100s, in the trust account of your own operating funds to cover bank fees, wire fees, those types of things. It's not allowed in all states, and the amount does differ by state. So you want to ensure you know if that's available or allowed, and if so, how much. Other than that, there should be no other operating funds in the trust account. Earned income, this is actually one that most don't think about. When you are billing a client and you're supposed to take that money out of trust, there are many firms that kind of leave it there for a little bit. Get to it later, end of week or end of month, and sometimes it sits there. The biggest problem with that is your balance becomes very deceiving. You don't know what actually is available if you're not keeping your records properly. And that money is kind of commingling. It's actually earned by you, but it's commingling with funds that are not earned. And your bookkeeping can get very messy, and it can get very difficult to understand what's available and what's not. Anything related to the business. So no business expenses should be paid out of trust. If you're getting reimbursed for an overhead cost that you've agreed to with your client, that's one thing, but you should not be cutting checks out of anybody's trust account to pay for payroll or any sort of business expenses. That's basically stealing from your clients. And whenever you're not the fiduciary trustee, so having that money in your trust account, you're taking on that responsibility. There are people, like that third-party funds I mentioned before, there are law firms that part of what they do is hold funds for other people, entrusted to other people. You can do that, but if you're not willing to take on that fiduciary responsibility, absolutely do not take any outside funds in your trust account. So what goes wrong? I do like to kind of briefly explain these items because you may be experiencing these, you may not. It all depends on the processes that you have, also the tools or bookkeeping records that you keep as to whether or not they allow you to do these things, but they're very common. First is the lack of trust-specific knowledge and rules. I already mentioned that. You want to be educated as to what the requirements are for your state. You should know what is asked for in case of an audit. You should have a list of things that will be asked for, and you should be able to produce them, tomorrow. So having that awareness yourself, as well as any of your staff that may be involved in the trust account. Using manual or generic systems for the trust account especially, it's a very risky move, because if you're keeping maybe a written ledger or Excel or something that you've kind of developed yourself, they're very, very flexible systems and will allow you to really do anything. And that's the biggest struggle with the trust account. You actually want something that's fairly restricted so you can't do the wrong things. And when I say wrong things, I'm referring to the next 2 points, which is commingling of funds. If you lose track of who has what in which matter, that's a big problem from a compliance standpoint. That's the basics of trust accounting. You need to be able to identify those ledgers. Your trust ledger overdrafts, you shouldn't be overdrafting on any matter. And the issue is often when you're maybe manually tracking this data or these balances, you could just forget to make an entry and not realize that you overdrafted. It's very easy to miss that, especially if you're not reconciling regularly. Absence of safeguards, that kind of goes with manual systems, but really any tool that you're using for your bookkeeping that involves your trust accounting, you need to have some sort of safeguard in place that will block you from doing various functions. Really any legal specific accounting or trust accounting software should have safeguards in place so that you cannot do overdrafting, commingling, and all of that. Your uncleared funds not being addressed. Now, this is part of bank reconciliation. So when you are reconciling each and every month, your first goal, of course, is to reconcile, to balance out, to close your month. But those uncleared items, you need to keep an eye on those as well, because they will go from month to month to month to month, and you may forget about it. You may not even realize that those items are still hanging out there. Could have been a check that was lost. Could have been a client or a third-party vendor just holding on to the check and not depositing it yet. That affects your balance. That affects your available balance. So you want to stay on top of those uncleared funds. They are, especially with the trust account, your responsibility until they are cleared. Reconcile monthly at a minimum. You can even reconcile daily or weekly with many tools, but monthly is the minimum. And you want to make sure that you are, even if you're not doing the work, like I said, even if it's your bookkeeper, you should be asking for reports that show that reconciliation is complete. What are those uncleared items? Are there any negative ledgers? That check and balances is necessary for any of these functions. And the billing and trust records are kept separate. What's interesting about trust accounting is there's both a billing component, which is the retainers that you're managing that will eventually be earned in many cases, but there's an accounting component, because that is where you're reconciling, printing your checks, doing your compliance reporting. So think of how your records are maintained: billing, trust, and business accounting. Are they together? Are they separate? Are some of the functions communicating, some of them not? And how is that complicating or risking errors within your trust account? So some pointers to think of, definitely keep, when it comes to compliance, trust accounting is at the top of the list. Second resolution is focusing on client cost recovery. You want to, and this is actually an interesting scenario, you want to obviously get paid for the work that you do, but many people don't realize you also want to get reimbursed for the cost that you pay. As a law firm, you're paying a lot of costs out of pocket that you want to get reimbursed for by your client, which of course sounds straightforward, but there's so many different ways that information can get lost, and therefore you're paying costs and never getting reimbursed for it. So you want to increase that recovery, increase the percentage of costs that get reimbursed as much as possible. You want to record in real time, not just your time that you spend, but your costs that take place, so that you don't lose track of them and that are easily billed on further to your client. So when it comes to expense tracking, a few points to keep in mind. One, you want to understand the difference between soft and hard costs, also known as indirect. Soft costs are also known as indirect, and hard costs are also known as direct. It all has to do with what that cost is in relation more so to your firm. So soft cost is more overhead, maybe printing or photocopies or something that's an expense to your firm regardless. It's going to happen no matter what, but perhaps you want to pass a portion through to your client. You can do that. Hard costs are directly related to a matter. That's like your filing fee, your expert witness fee, anything that would not have happened if not for this particular case. That is direct to your client. How those are captured is the trickier part, because when you're talking about overhead, really that is a matter of habit. You need to first understand how you're going to pass that through, if at all. Some firms just absorb their costs for printing and photocopies. Or you're going to itemize, X amount of cents per copy, or you're going to add like an administrative fee to your invoice to capture all of that. So that's what soft costs. With hard costs, it's more so about ensuring those items get captured. Because if you're going to court today and you're paying, filing fees for a whole bunch of clients, how do you make sure that makes it into your records? You may pay by credit card. You may pay by check. It's not advised to pay by cash, but even if you do, maybe that's all the money that you have on you that day is cash, and you need to do that. You need to have a really solid record to ensure that those get captured. Also, often these costs may be tracked from an accounting perspective, but never billed to the matter. That second step is often missed, usually because it's in separate tools or in separate records. So you want to make sure that anything that's related to a matter actually gets posted to that matter for billing. And then from an accounting perspective, how are they booked to the general ledger? Because these are client costs. It's not a firm expense when you're talking about something you want reimbursement for. So it needs to be recorded as either a direct or indirect client cost on your general ledger. And if you're not sure how this is happening right now in your firm, talk with your bookkeeper, talk with whoever is managing your general ledger. How are those costs being entered? How do they make sure that nothing gets dropped? How do they make sure that everything allocates to the particular matters and to the proper general ledger accounts? Ask these questions, and then you'll know where the gaps are and possible ways to improve upon those. Our third resolution is related to tracking income. You want it to be accurate, but also in detail. Income is basically the heartbeat of your firm. That is how you survive. That is how you grow. You want to continue to bring in more income from various sources. So you want to track it as accurately as possible. But the detail part is where you can actually make certain decisions based on your tracking of your income. If you, when you bill your client, not if, but when, there's a lot of different things you may bill for. Could be fee, could be tax in certain states, could be costs, whether indirect or direct, could be late fees or finance charges. There are a whole bunch of different items. So how does that get accounted for on the accounting side? Billing, you just care that the invoice is paid or partially paid and what the balance is. But what happens on the accounting side of things? How is that income actually tracked? So here's a listing of revenue allocations. So when you receive a payment from a client, there's a certain order in which that payment should be allocated on your general ledger. So if you have a $1,000 invoice and you received, we'll keep it simple, $500 payment from your client. Many times you're thinking, well, where does that $500 go? Now, general accounting software will just proportionally split that across these different items. So it'll sprinkle a little bit of reimbursement on costs, a little bit on finance charge, a little bit on fee income, that eventually will add up to that $500. Problem with that is not how it should go. All of your costs, all of your liabilities, all of that should be covered before any fee is earned. And I encourage you to see what your current setup is. How is that happening? Either look into the tools that you're using or the staff that does this work for you to see if that's actually the case. Because if you get partial payments, you may be misrecording your income, or you may be, especially if you're using the tracking of income to make certain decisions, do you really want to count something before your costs are covered? I would think you want to not even count something as true income or profit, obviously, until your costs are covered. So it will affect your business decisions as well. And that actually takes me to this next point. When you have a misallocation of income, it can affect your income distribution. So what I mean by this is very often whenever there's a partnership involved and more than one attorney, fee distribution becomes a primary mechanism for measurement. You may want to see who brings in what money. It can be, as you see here, an originating attorney, and that attorney might not even be in your firm. They may be somebody outside your firm that does a completely different area of practice, and they've referred somebody to you. Well, you may decide, if your business is highly referral based, that maybe you want to reward that person for giving you that lead. Maybe you want to give them a percentage of the income that came in on the case that they referred. It's all about increasing those referrals that are coming in. So the originating attorney, the responsible attorney, which is the matter owner, whoever's responsible for that particular matter, the working attorney, usually in the case of fixed fee cases, and any timekeepers, people who are working on those cases. So you may decide, and you may already have in place, a mechanism for motivating these parties on these matters by saying, either just tracking the amount of income that they bring in, or taking a step further where you actually distribute based off of the money that they bring in. So the first step is understanding the different types of parties in your firm, who is in what groups. You may be an originating attorney on some matters, a responsible on others, and just a timekeeper on others. So you can have a variety of roles throughout all the different matters. But what are those roles, and how, if at all, should they be compensated? So you have who are the parties, then you need to compute what was collected in fee. So I gave that example of that $1,000 invoice. Maybe, again, we'll keep it simple, $500 was cost and $500 was fee, right? And you received a $600 payment. You only earned $100 in fee. That is it. So that is what should factor into an income distribution, not the rest of it. Even though you received $600, 500 of that went towards costs. So understanding how to strip out that fee, how to only focus on what was earned in terms of time spent and time billed, and actually collected, not just, I billed them for $1,000 worth of my time, but I only collected 200 of it. It's the 200 you want to focus on. So how you compute that, and then lastly, distribute. So if you do have a percentage, again, some firms just say, I want to know the dollar amount that each person brought in what particular role. And some say, no, I actually want to give maybe 5% or 10% to my originating attorney. So that way they're rewarded based on how profitable this particular matter is. So decide what works best for your firm, but if you're doing this currently, or if it's something that you're interested in, you do need to have your billing and accounting communicating very well together, because your parties are set up on the matter. The billing happens, of course, when you're invoicing. What actually gets paid is recorded on the billing and the accounting side of things, but what is accounted for as fee is accounting. So that whole workflow goes through those different types of functions. Our fourth resolution is actually kind of piggybacking on the prior one, is you want to leverage this data to make better business decisions. So not just about, with income distribution, you're saying, well, who brought in the income, and possibly rewarding them or having a bonus structure or distribution structure in place for that. There are many other things that you can do. At the end of the day, you are a business. You want to make decisions that will take you in the right direction. You may discover, if tracking data properly, and actually tracking data to begin with, that certain decisions in the past may not have been the best, and you're able to maybe change the direction going forward. So know the data that you're tracking, but what can help you to make those certain decisions. So in regards to different types of data, things to think about. Now, it does depend on your size of your firm, if you're a general practice, or if you focus just in one area, if you have multiple locations. So one piece of advice is tracking income by practice area. Practice area could be beneficial to a 30 attorney firm or a solo. If you're working in different areas, it's very valuable to see what income came in from each one, to see what is most profitable. Because again, you may have a completely skewed idea based on how many clients you have in a particular area, but what if those clients aren't paying you? Or what if they're only paying you enough to cover your costs? You're not actually earning any profit. And that's the important piece you want to have in mind. And it should not be a feeling, an assumption, I think this is doing well. It should be data. So you want to leverage your billing and accounting financials to see which of those practice areas are running the best for you. And others you may decide to either stop doing or maybe move more resources to a certain area. And it can help you to plan your marketing, help you to plan all of your different supporting functions of your firm towards one area more than another. Party, that's like in the prior point, if you want to track your different matter owners or timekeepers as to the work that they do and what actually gets collected. And even location. If you have multiple offices, you want to see where different locations are in terms of the profit of the firm. One concept to bring up to really support all of this is class-based reporting or class-based accounting. Now, the prior point I mentioned, the income distribution, is fairly unique to law firms because you're tracking parties, you're taking into account the allocation and how that's unique for law firms, the distribution of the fee. That's very specific to law firms. Class-based, not so much. It's actually a very generic accounting term. You can use classes to track like the items above, different locations in your firm, different practice areas, different parties. The difference is it's not just income. You're not just focusing on the fee that is being paid. You're also focusing on the flip side, which is the costs. So you want to be able to, let's say you're not so concerned about just the income, but you want to see what's the balance between my costs and my income. And that includes, you might have an advertising expense that you want to allocate half to your family law practice and half to your real estate area. That could be split when you're doing class-based reporting. So if you have these different criteria, I do recommend speaking with your bookkeeper or whoever's managing your general ledger to bring up this concept of tracking classes so that you can generate a profit and loss by one of those classes and make further decisions based on that. A third point is year-over-year trends. So one thing that you and your accountant or your bookkeeper should be doing right now, once the year is closing up, is looking at the prior year and trying to find trends. It could be really good trends, like a lot of income coming in a certain area, or you may notice certain times of the year are more profitable than others. You may see items that you're spending way too much money on, and that is the year-over-year trend. So you can compare 2018 to 2017 and see your advertising was 3 times the cost as the prior year. Why was that? And did you receive a return on that investment or on that cost? Those things should be analyzed, and you should work with support staff who is willing to help you with that analytics so that you can make the right decisions going forward to maybe cut back on certain things or maybe add more resources somewhere else. And our fifth resolution is kind of, it relates to a lot of the other things that we talked about, because whenever you're talking about accounting for your law firm, these two areas are very much connected. So if you noticed with the different points that we brought up that you have a gap or you have holes in your process when it comes to, most of the time it's the billing and accounting in between those two. Like we talked about trust accounting. All right, and trust accounting is something that, as I mentioned, deals with your billing and also accounting. How is that happening currently? How are those pieces of information accurate? Because one thing with the trust account, especially whenever I'm talking to a firm that is managing separate systems, is I'll say, where are you managing your trust accounting? And they'll say, I have my balances here and I also have my balances there. And I say, okay, do those balances match? Most of the time the answer is no. So then I know that likely the more accurate balances are in whatever accounting tool they're using, because that's where they're reconciling. As long as they're reconciling regularly and as long as they're, following regular compliance rules, it should be more accurate there. But think of the consequences. If you are, let's say you've reconciled your trust account, you notice a mistake, which is common in reconciliation. You need to fix that mistake. You need to make sure that mistake is reflected, or that fix is reflected back in your billing records. If that fix is not reflected back in your billing records, your retainer or your client fund balance is then inaccurate. And you may try to earn money from that retainer that's not actually there. And that's how you result in a overdraft that's not intentional, but it's very easy to do, and it's still a compliance violation, whether you meant to do it or not. So understanding how the communication between these functions can directly affect your good or bad standing in regards to compliance is important. Same thing with costs. You pay out of your business account, but you need to bill it to your client. With your income, you bill a client, you receive a payment, that has to be recorded on your general ledger. So those are three core functions of a law firm, and it all involves going back and forth between these two functions. So think, how are these being managed? And if you're not doing it, have a conversation with your team. So when you have, this is kind of just a summary of those certain points that we covered. When you have isolated systems, you have to worry about, first of all, if it's a generic software that you're using for, let's say, your accounting, which is most typical, is it custom to law firms? Does it have the ability to manage a trust account? Do you have legal specific general ledger accounts? Does it have safeguards in place so you don't do the wrong things? And does it have the reporting that you need? Double data entry, obviously if you have multiple programs, you'll be entering data in multiple places, but with financials especially, I mean, this should be a rule across the board, but definitely with financials, you want to have as little duplicate entry as possible. If possible, only once enter that information, because the more times you enter it, the higher the risk of inaccuracies. You could just, transpose numbers, you can add an extra zero by mistake, you could reference the wrong matter. It's very, very easy to do that. And also, even if you are doing a very good job at double data entry, you need to have checks and balances in place, so that's taking extra time as well. Handling your client funds, I just told you about trust accounting and how there could be challenges there. With your costs as well, ensuring those actually get reimbursed and don't fall through the cracks and just end up, being additional income lost from the firm. And then tracking your income as it comes in, making sure it's allocated properly, as well as doing your maybe more advanced reporting to see where that income is coming in and making decisions based off of that. So that covers our 5 resolutions for legal accounting for 2019. One final point is for those who are not familiar with Cosmolex, we actually have a all-in-one cloud-based practice management system that also includes your legal billing and accounting. So it includes everything that you see here. If you'd like to learn more about it, of course, feel free to reach out to us at any time.